Well, here it is. Portfolio's down $10,000 this week. If you've been watching this channel, you know that I'm building this $10,000 portfolio to $1 million. The goal is over the next 10 years. I am adding money to it along the way, and I'm sharing every step right here transparently on YouTube. So what happened? If you've been watching the videos, you saw the portfolio on its way up, and now you're seeing a portfolio on its way down. All right, I'm going to share everything transparently right here on this channel. This is what happens when you invest in individual stocks and when you invest pretty concentrated in high growth, highly volatile, and risky companies. Those are the types of companies I invest in, and I try to make that clear on this channel, and I hope it is clear through sharing the ups and the downs. The reason I invest this way is because I'm comfortable with it. I'm comfortable with the companies that I own. And these aren't momentum stocks. These are stocks that I truly believe in over the long term. And I'm happy to own them now, knowing that there's going to be volatility because I want to build positions over time. And the secret is what I'm doing next, I talked about it in the title of this video, is nothing different than what I've already done. I have new money coming into the portfolio next week. I'm going to find the best stock that I think has the best risk reward that I either want to build more of a position in, maybe it is already in the portfolio, or is a new stock that I'm considering. And I talked about some. This is my email newsletter. Again, it's austin.substack.com, linked in the description below. I wrote this to subscribers this morning. This was, I think, before the market opened or right after. We were at 92,772, and today's just been down, $4,000 today. So anyways, because of the rebound in a lot of the growth stocks, and I actually talked about this in a previous email newsletter as well, for new ads, I'm not selling anything, but for new ads, I'm actually starting to consider dividend stocks because we had a major rebound in some of my growth stocks, and some of them are not as good of a risk reward as I feel they were. That's why I piled as much money as fast as possible into them as I could. I feel like this was a great opportunity with this sell-off. And so now the pendulum is kind of swinging back to where some of the better risk reward is potentially in dividend stocks, which is why I'm now starting to pay more attention to them. And again, this is to add with new money. So that's Advanced Auto Parts, AbbVie, Cigna, Costco. Costco's still way too expensive. John Deere, Intuit, Lowe's, MasterCard, Nike, Parker Hannifin, Raytheon, TransDigm, and Taiwan Semiconductor. But with some of these growth stocks now selling off pretty significantly, then next week when it comes time for me to invest in my next position, I might find a good risk reward in these positions to continue adding, because if they stay down or trade lower, then I want to be invested in growth stocks. I'm just going to be careful adding to them as they get closer to fully valued over the short term. That's how I'm thinking about it. But I have 10 years to be adding to these positions. So, my goal over this time period in the 10 years is probably to own around 20 stocks at about a 5% cost basis for each position. That means how much of the portfolio, the full portfolio, I will have invested in each position, about a 5% cost basis. So pretty much evenly, and then just let the stocks take care of themselves over time. If one doubles or triples or whatever, I won't keep adding to it necessarily if I have my full 5% or so cost basis of the end portfolio value. But I also won't sell a stock just because it's going up if it's not extremely overvalued, in my opinion. So that's kind of how I'm thinking about the portfolio. People might be panicking. Let's see what the market is doing. Yeah, the market's selling off. The Nasdaq's down 2% today. S&P 500 is down 1%. Dow's down 0.8%. Russell 2K is down 2%. VIX is up 6%. So this happens in the stock market. I like to focus on being a long-term investor. That's not for a lot of people. But I'm not trading in and out of things. I have the positions I own. This is a long-term portfolio. I'm sharing the ups and the downs right here. And nothing changes about these stocks when the price of everything goes down. If a company reports bad earnings, or a new competitor comes into play, or management isn't keeping their word, or there's turnover, or something with your thesis for a stock changes, that's a reason for me to sell. not because the stock price is going down along with everything else. Of course, these are going down more because they're more volatile than the market. But when everything's going down, that's when I look to add more to what I think are great companies if they're going down in conjunction with the whole market, not because of individual things with each stock, okay? And so that's my style. That's what I'm doing next. That's what I'm doing as soon as possible. I am sticking to my plan as soon as possible. I am finding ways to not obsess over the stock market and trade in and out on a daily basis. And I believe the best investing is long-term investing. That's how we build good wealth over time. And nothing to the negative has changed about these stocks over this week. Okay, so we have a couple earnings coming up that I'll cover on the channel. Just off the top of my head, Snowflake, Crowdstrike, Gitlab is reporting sometime soon. I think MongoDB. And yeah, those are the earnings reports coming up in the next couple weeks. So if you like this content, you like the transparency, do me a favor, like the video and subscribe to the channel. Hit the notification bell so you never miss an update when my videos come out. I'm going to do another one today, actually, so make sure you watch out for it, covering some of these dividend stocks and why I like them, okay? And I'm going to cover, this is Simply Safe Dividends. It's really small for you to see, just giving you an example. I'm going to cover this kind of database that covers dividend yield, PE ratio, dividend safety, 5-year dividend growth rate, their dividend growth streak, uninterrupted dividend streak, payout ratio, net debt to capital, and then I'll jump into fast graphs and show you if I think they're overvalued, undervalued, or not, based on how they have historically traded and future earnings expectations. So, like the video, subscribe to the channel, have a good week, don't stress too much about your portfolio.